Good morning. Before we start today's lesson, we want to look at analyzing the following transaction and creating the appropriate T accounts. If you remember, when we analyze a transaction, first we have to look at the statement, look at the information we have, and we need to answer a few questions. We need to answer the questions: which accounts are affected? Are they debited or credited? And for how much? In this example, we read that on 11/1, Roadrunner received the bank statement. A bank service charge of $8 appeared on the statement. So we need to analyze this transaction, journalize it, and then post it to the general ledger so that our records are up to date. So the accounts affected are first cash in bank and miscellaneous expenses. Miscellaneous expenses is where we're going to put things like bank service charges. Cash in bank is going to be credited. Miscellaneous expenses is going to be debited. Remember, there will always be at least two accounts affected and at least one account credited and one account debited. And they will be credited and debited for the amount of $800. So now, when we complete our T accounts, we have cash in bank with a credit, remember credit on the right side, of $800 and miscellaneous expenses for a debit of $800. Alright, so with that in mind, let's take an overview of our schedule for Chapter 11. So we're looking at cash control and banking activities now. Next week, on the 8th and the 10th, we will have a work period. And then on the 14th, the Chapter 11 test, which will be open notes but not open book. So make sure you're taking good notes and make sure your notebooks are in a good space. Due dates for Chapter 11. Everything is due on the 14th for Chapter 11. The Moodle quizzes 11.1 and 11.2 are due by 12 a.m. the 14th. The working papers 11.3, 11.4, and 11.6, and also the Chapter 11 vocabulary needs to be turned in at the beginning of class on the 14th. And also keep in mind the spreadsheet assignment is due the 23rd, which is the last day of the marking period, at 12 a.m. So let's get on to looking at cash control and banking activities now. When we talk about cash, we're referring not just to real paper money. We're referring to currency, coins, and checks. Basically real money. So we're making a distinction between cash and credit. Credit is kind of imaginary pretend money. Cash is real money, something that you can actually see and touch. You actually have the money in your possession. The goal with cash control is protecting that cash and other assets, because cash is the most liquidable asset that a business has. So we want to make sure we take good care of it. We have two kinds of controls. We have internal controls, which are controls within the business that are designed to protect the cash and other assets. And this would be things like limiting the number of people who handle the cash, separating accounting tasks involving cash, making cash payments by check, depositing your money daily, reconciling the bank statement, which we'll talk about later, and a few other things that you can see listed there. External controls are things that happen outside of the business. So they would be things that the bank does to control and take care of our money. So we deposit money in the bank. The bank verifies that only people who have authority to access that bank account are accessing it. And also they keep records of everything, every transaction on the account. So the first thing we want to look at is, what is a checking account? A checking account is an account that allows a person or business to deposit cash in a bank and write checks against the balance. The depositor is the person or business that has cash on deposit in a bank. Finally, we talk about making deposits. Making deposits, we use a deposit slip, also known as a deposit ticket, and we use a bank form listing the cash and the checks that are going to be deposited. So the first process today that we want to look at is the process of making deposits. This process involves preparing a deposit slip. There's 4 parts to the deposit slip. We want to include the date, the cash and coins that we're depositing, the checks, and if we have too many of them, then we'll list them on the back or on a separate sheet of paper, and then the total amount of the deposit. So in this example problem, 11.1, preparing a deposit slip, we look at the information we're given. It says on April 10th, Joan Tate, owner of Tate's Supply Center, received the following checks and cash. So the first thing we want to do is we want to complete the date on our deposit slip, April 10th. The next thing we want to do is we want to look at the cash and coins. So it says $721.45 total, but then it splits it out into how much bills and how many coins. So first, we're going to take the $6.98 and put it next to the bills. Then the coins, $23.45. Now, we're going to list each of the checks, and we're going to list the ABA number, which we'll talk more about when we look at a diagram of a check. But in this case, ABA 44-9876. And we're going to list the amount that goes with that check. So $39.80. Now, we're going to list each of the other checks and their amounts as well. And then for our last step, we're going to list the total, $1,203.84 down at the bottom there. There's one more step in making a deposit. We need to update our records. So recording deposits. First step is we put the date in. And you do that on the deposit, on the checkbook, in the checkbook on the next check stub for the next unused check where it says add deposits. You're going to write the date, 4/10. Then we're going to do the amount, $1,203.84. And then finally we need to update the new total and write that in the total. So we'll take the balance brought forward of $1,874.22 and we're going to add $1,203.84 for a new total of $3,078.06. So let's look a little more at a check. A check is a written order from the depositor telling the bank to pay the stated amount to a person or business that's listed on the check. Here we have an example of a check. We have two parts. We have the check stub and we have the check itself. So first, we want to look at the ABA number. Up there in the corner, it's a number, two numbers separated by a hyphen, and a number underneath the line. So it's written kind of as a fraction. The number to the left of the hyphen on the top refers to the city and state. The number to the right of the hyphen, in this case 505, refers to the specific bank. The number on the bottom refers to the Federal Reserve District. Next we have down on the bottom the set of numbers that are kind of look like they're encoded. That is called the MICR, which is Magnetic In-Character Recognition. The payee, where it says pay to the order of, we write the payee, which is the person or business to which the check is written. And the drawer, down in the bottom right there's a blank line, and that's where you put your signature, is the person who signs the check. In regards to the signature, there is what we call a signature card, which is the card containing the signatures of anyone who is authorized to draw money from the bank account. So when you open an account, you sign your name on a signature card and the bank has reference to that. Finally, the drawee is the bank on which the check is written, in this case First Bank of Atlanta. So let's look at a problem of writing a check. It says we want to write a check for $115.86 to Valley Utilities for the April electric bill. Use the date of May 8 and sign your name as a drawer. Alright, so the first step here is to complete the check stub. We always want to complete the check stub first. And this has two parts, the summary and the effect. The top part summarizes what the check is for. The bottom shows us what effect that check has on the bank account. First, we're going to take the amount and write it there, 115.86. Then the date, May 8th. It's 2 Valley Utilities and 4 the April electric bill. Next, we take the amount of 115, or we're going to bring the balance brought forward down to the total if it has not already been brought down there. Then we're going to take less this check. We're going to subtract the amount of the check we're writing and calculate our new balance. The second step is to complete the check itself with all that same information. We have the date, paid to the order of, the amount, and now here we're going to write the amount again, but we're going to write it out in words, $115.86 over 100 as a fraction. So the cents are written as a fraction. You're going to sign your name as the drawer. A memo, optionally, oftentimes you'll write the account number for in this case, the electric bill. Now what happens if we're writing this check and we make a mistake? We write the words void over the check and also over the check stub. When you're given a check, remember, a check is a form of property. It's a way that a business or a person could take assets that they have and give it to somebody else. An authorized signature on the back of a check that transfers ownership to the bank is known as an endorsement. And we have 3 kinds of endorsements, each with a higher level of security and control. First, we have a blank endorsement, which is just simply signing the check on the back. So if a check is written out to me and I sign my name on the back of the check, that is a blank endorsement, a signature only. A special endorsement. If you write a check to me and I sign my name and I put somebody else's name on it, then that transfers ownership to that specific person or bank or business. Finally, a restrictive endorsement is to a specific person or business with a specific intent. Example would be writing the words deposit only followed by the account number. Moving on, when we looked at a trial balance, what did we use that for? If you remember, a trial balance was a means or a way, a formal way to prove the balance, to prove the general ledger account, and to make sure that your accounting equation remained in balance. In the same way, we're going to look at proving cash. We want to make sure that our bank account balance agrees with our checkbook balance. Some common errors that we can have. 1, faulty addition or subtraction. 2, failure to record a deposit or a check. And 3, a mistake copying the balance forward to the next check stub. It could be that I copied 1874 instead of 1847. When we find an error, if we're looking at proving our checkbook or proving our cash, if we find an error, they are fixed and recorded on the next unused check stub on the line between add deposits and total. So in this instance, we found an error on check number 22, and it was an error that caused our bank account to be off. So we say less, error correction, check 22, and then you would write the amount of the error. And since we said less, that means we're going to subtract. So now our updated adjusted balance is $1831.69. Next, we want to look at the reconciliation process. This process begins with a bank statement, which is an itemized record of all the transactions in a depositor's account over a given period, usually a month. It includes 5 parts. First, the balance at the beginning of the statement, the deposits during the time period, the checks that were cashed or honored, other deductions such as service charges and possibly interest earned, and the balance at the end of the accounting period or the period. So let's look a little further at some things that are included on the bank statement. You might have canceled checks. Okay, these are checks that have been paid and fulfilled or deducted from your account. Imaged checks, these would be also called substitute checks, and these are copies of the original checks. And finally, we want to look at the term reconciling the bank statement or bank reconciliation. This is the process of determining any differences between the bank statement and the checkbook. So let's look at this process. And first off, let's make the statement that when we do this process, very seldom is your bank account balance and your checkbook going to agree with the balance on the bank statement. And these are the reasons why they disagree. 1, outstanding checks. 2, outstanding deposits. And 3, bank charges. So outstanding checks and deposits, these are checks and deposits that have been made and recorded in your checkbook, but not on the statement because perhaps the person you wrote the check to didn't cash it yet. Bank service charges, these are fees that the bank charges for maintaining bank records and processing the bank statement items. Typically, the depositor doesn't know about this fee until the statement comes out. So, step 1, before we reconcile our bank statement, we need to make sure that we analyze these bank service charges just like we did at the beginning of this presentation. We analyze, journalize, and post those transactions and fees just like any other transaction. It's important that these charges, or interest in some cases, be accounted for before beginning the process of reconciling the bank statement. So now let's look at the actual process. On the back of the bank statement, typically there's a form for reconciling the statement. The first piece is to look at any of the outstanding checks. So in this instance, check number 105 and 106 were recorded in our checkbook, but not on the bank statement. So we total them up for a total of $1,100. 2, we look at the ending balance that is shown on the statement, and we write that there. If there are any outstanding deposits, we record them in the next box, and then we give ourselves an updated balance. So if there were added deposits, we would add them to the balance shown on the statement. Outstanding checks and new balance. So now we're going to take the number that we came up with in step 1, 1,100, and we're going to move that over. And because these are checks that were written but not yet cashed, we'll subtract them from our balance with a new balance of $21,117. This balance should match what you have in your checkbook. Another way to look at this is very similar to the form that we used for the changes in the owner's equity, the statement of changes in owner's equity. We can look at this in a 2-column format. So again, we have the same fields. We look at the outstanding checks. We start with the ending balance on the statement. We add any deposits that have not yet been incorporated. We add any outstanding checks and update a new balance. And then finally we compare the adjusted balance with our checkbook balance. So here's an example, a process. Let's walk through this process now that we know the parts and the steps of actually reconciling a bank statement. So the first step, we take our checks. We write the check numbers on our checks outstanding. We write their amounts, $245, $88, and $461, and then we total them up for a total of $794 at the bottom. Step 2 is the outstanding deposit, then we're going to write the ending balance on the statement, which would be the beginning balance. This is the ending balance on the statement, $1,242. This is what the bank says we have. Outstanding deposits of $2,700, we need to add them, and we need to add them to what the bank says we have for a total of $3,942. Now we need to take the total of the outstanding checks, and we're going to need to subtract them. So we enter that total in the next line and subtract for $3,148. Now you'll see this does not match the balance in our checkbook. What did we do wrong? We need to remember before we reconcile our bank statement that we analyze, journalize, and post the bank service charge. The difference between what we came up with in line 7 of $31.48 and the checkbook balance of $31.72.50 is the bank service charge of $24.50. So we have been reconciled and things should be good. All right. Some special banking procedures. Suppose a business does not want the bank to pay a check that was issued. If this is the case, they can order a stop payment order. Typically, there's a fee charged for this. And you can see the pictures here. On the check, obviously, has been already sent out, but on the check stub, you're going to write the words stopped payment. So you have in your records that that check should not be honored. What if a business receives and deposits a check from a customer whose account does not have enough money? In this case, we have what is called an NSF check, or a bounced check. NSF stands for not sufficient funds, and the check is just no good. The other option would be a check has a date in the future, and this is called a post-dated check. And just think about some times when we might want to do this. Suppose I'm meeting with someone and I want to give them the check, but the money's not going to be in my bank account for another day. Well, I can write the check a while with a date in the future, so I don't have to make a second visit to that person and give them the check later. It's important with some of these special instances, recording a bank service charge like we talked about at the beginning. We looked at the T accounts. All right, so now we look at the example when we record this service charge in the journal. And let's just take a quick look at that. We have the date, August 8th. Miscellaneous expense is our debited account for $12.75. Remember, bank service charges are a debit to miscellaneous expense. Cash in bank is credited then for $12.75. And for the source document, or a reference to the source document, we write bank statement and the date of the bank statement. It's also important if we get a returned or bounced NSF check. We need to record this so that our records are up to date. And here's an example how that looks. August 21, accounts receivable. So they paid us a check, it was no good. So now they owe us money. That's accounts receivable, gets a debit of $98.45. And when they wrote us the check, we debited cash in bank. But that check was no good, so now we're going to credit cash in bank for that amount. And then write NSF check. And if you wanted to, you could also include the check number. A few terms as we close things out today. The term Check 21 refers to check clearing for the 21st Century Act, which is an act that allows the conversion of a paper check to an electronic image that can be processed quickly or the same day that it was written. So it allows for quicker transactions. Electronic Funds Transfer System, EFTS. This allows banks to transfer funds quickly among accounts and accurately without the exchange of actual paper checks. Bank card. A bank-issued card that can be used at any ATM to conduct banking activities. And finally, automated teller machine, ATM. To close out our presentation, I just want to highlight a couple resources. In addition to the textbook that you have, a website, Accounting Coach, has some good resources, explanations, practice quizzes, crossword puzzles, and word scrambles dealing with bank reconciliation. So hopefully this was helpful. Again, feel free to watch this as many times as you need to understand and let the information sink in, and we'll see you in class.